Hello everyone, very good afternoon. I hope my voice is audible. You can give me a quick yes or no on chat. Let me just drop a message there. Right. I hope all of them are able to hear. We have uh, a decent number of audience. Obviously, we'll wait for a little longer so that the rest of them can join as well. Yeah. Good afternoon, Miss Sarita. Okay, great. So audience, yeah. Okay. Very good afternoon, Mr. Venkatesh. All right. So, audience, we'll be starting off shortly. I'm just waiting for a few more of them to join so that we can get started. So, in the meantime, I'd like to know what is it that you're expecting from today's session. As you all know, we have our regular speaker, tax veteran, Mr. Akela A.S. Prakasa Rao, who will be running through the topic that is how you can master GST compliance, the best practices and guidelines that you will have to follow in order to master your GST compliance. Now, there are some things that we will talk about today as per the agenda that you can see. But I'd like to know what is it that you are thinking that we will be covering in today's session. Please use the chat, and I would like to see some inputs from you guys. As we will start off shortly, but I'd like to have some interaction before we start off. So let me leave the chat on for all of you. Okay, audience, no expectations as such. Let's see if maybe one or two can put something on the chat. Mr. Venkatesh, Ms. Sarita, anyone? Okay, we have Mr. Anil who's mentioned DRC1B impact. Okay, a rather technical term, I believe that is. All right, good to see one response. Anyone else? Okay, Ms. Sarita mentions latest updations in GST. Okay. Okay, so audience, I see one of them was mentioned. Mr. Nagaraj has mentioned a query on Q&A. Can we use credit ledger balance for payment under Rule 42? Okay, so this is something I believe our speaker, Mr. Akela, can take up, sir. So I will leave this here on Q&A. We will surely take this up as we have a dedicated Q&A session as the session moves forward. We will surely take it forward, sir. Okay, coming back to chat, Mr. Sairam says about input reversals and reclaim, and Mr. Anil with one other comment mentioning 88A availment. Okay, good to see some responses, guys. Let's keep this engagement going on. We will start off shortly in about 3 minutes. Once again, thank you all for your patience. I'm seeing the The attendees number is slowly increasing. We can definitely start off, I believe. So in about 2-3 minutes, we'll start off, guys. Thank you. In the meantime, if you have any other expectations, what you think will be covered in today's session, please use the chat. Okay, I see Mr. Lohit has raised his hand. Let me know if you have any query, Mr. Lohit. You can use the chat. Yeah, Mr. Nagaraj, I think it's the same question that you had mentioned on Q&A, right? As I mentioned, we will take it forward, sir. As the session goes, we will surely answer that. Okay, Mr. Muniswamy says impact on notice under DRC 01C. Okay, noted, sir. Noted. I think we will. If this isn't covered, I'm sure Mr. Akela can throw in some points on that end. All right, audience. Just a few more minutes. We'll start off. Okay, wonderful. So let's get started, guys. Very good evening to everyone present here. Once again, thank you all for your time in attending our webinar today. I'm sure we will have a wonderful session as we are going to cover a rather interesting topic today. That is how you can master your GST compliance in order to elevate your business success. Now, when we mean business success, it can mean over a time, as you will eventually follow some protocols, some guidelines and practices, which can eventually help you save costs and so many other elements. So that is what we will be covering today. We have with us our expert and tax veteran, Mr. Akela S. Prakasarao, who will be introduced as the session goes forward. So let me introduce myself. I am Siddharth. I handle product marketing at WebSol, and I will be your moderator for the webinar. So as we move forward, I would like to run you through a quick few slides about the company and what we have on offer on the products end, followed by which I will introduce the speaker and hand it over to him. And as I mentioned earlier, if you have any queries, if you have any sort of doubts regarding the slides, the topic, or if anything on the GST end, please feel free to use the chat or the Q&A tab, as our session's highlight is obviously the Q&A session. All right, so moving forward, let me quickly run you through the company's evolution, our timeline, what we have been doing, where did we start, and what we are in today's world. So our company, we were in fact part of Wipro, Wipro's domestic IT business back in 1988. So what were we doing here? Let me explain that to you. We were part of the printing business of Wipro. So we were manufacturing DMPs, that is dot matrix printers, which were really famous back in the days. And our company was known for the peripheral division. We were basically Wipro's peripheral manufacturing division. So when I mean peripherals, it can mean things like your toners, cartridges, so and so, that support the printer. So this is what we were doing. And over the years, we moved out of Wipro. We became a separate entity in the name of Wipro e-Peripherals, which eventually turned out to be Web Solutions. So what we have today on offer is a lot more than what we were doing in the initial days. We obviously have our printer business, which is our signature offering. We also have presence on the digital end. When I mean digital end, we have workflow automation solutions. We also have IT infrastructure management outsourcing as a solution that we have on offer. And something that all of you can relate to, our general audience today here, we also have a GST solution. We are in fact appointed by the GSTN. So more on the solutions as we move forward. And I'd also like to mention that we recently underwent a branding exercise. So we are fully rebranded. We have a new approach to things as we move forward. We are known by the name WebSol moving forward. So we have a completely refreshed product line as well. Our solutions go by the name of a business suite that is FluidWorks. So I will explain what that is just to give you an idea of what that is. A few quick highlight points of our company. We come with over 24 years of industry expertise, and we hold almost 563 enterprise customers as of today. We also have presence on the retail end. We have close to 3 lakh customers on that end. And as you can see, we are present in over 2000 plus service locations across India. And we also won the Company of the Year award by CIO Tech Outlook Review for our DMS solution. More on this as we move forward. As you can see, we have a quick view of some of our clients at the bottom. All right, moving forward. Now, as I was mentioning to you that we have a completely refreshed line of solution offerings under the name of FluidWorks. Now, FluidWorks is basically our workplace suite, or you could say a business suite of services. Under this, we have different solutions, again, which go by the name of Fluid. Now, the idea of Fluid is basically our solutions flow. Our solutions have a very customizable and a tailored sort of approach, wherein we will be able to provide you any kind of solution based on your requirement and can be tailored according to your needs, which is also scalable. Now, let me explain to you each what this exactly means in the next slide. So, FluidWorks, as I mentioned, is our business suite. Under this, we have Fluid Pro, which is our managed IT infrastructure services. What this means is we will be able to help you set up your data center. We'll be able to take care of your servers, your internet access points, your Wi-Fi points. All of that can be taken care on a remote basis. So we have our own team which sits in Bangalore and different locations. We'll be able to take care of that fully remotely. And what is Fluid Print? This is our managed print services solution. Let me explain what this is. Basically, if you have about 100 to 400, or you can define any number that you want. Based on the number of printers that you require, we'll be able to provide you that, and we will also take care of your entire printing network across the country. So different locations that will be taken care of, and we will also charge you on a pay per print basis. So not for your printers, but we charge you on based on how many papers you print. So this is what we do on the Fluid Print end. We are also number one in India on that end. What is Fluid Map? Now, in order to manage your IT assets and your printers, you need a remote device management solution, right? So this is what Fluid Map is. You'll be able to manage all your devices which are connected in your network across the country in different locations from one location itself. And this is what Fluid Map does. Moving to Fluid Trail, this is our workflow automation and document management solution. Under this, we have different workflows ready to deploy, such as employee records management for the HR team. We have procure to pay, which is the procurement solution for procurement departments. And lastly, document management, which almost every department will have requirement for, including your finance team, I believe. So this is what we do on the Fluid Trail end. And lastly, we have Flow Tax. This is something that might interest all of you. We have an all-in-one, one-stop solution for everything, anything GST. So the solution will take care of your filing, reconciliation, your e-way bill automation, e-invoicing. All of this can be taken care from our solution. And we also offer API and ERP related integrations. We also have a managed GST team. Basically, what we do is we will collect your raw data. We have an internal CA team which will take care of your filing reconciliation. We will prepare the data, validate it, and file it. So this is what Flow Tax is. And I will not touch the retail end. This is basically as we have presence on the retail end in terms of billing printers for Kirana stores, supermarkets, things like that. So that's it on the company introduction end. Once again, thank you so much for your patience and time. Now, I would like to launch a quick poll for all of you. Just give me one moment. All right, let me just launch this poll for all of you. Now, as you know, I will not be running a demo of our solution or anything since we do not have the time for that. And I would like to quickly introduce Mr. Akela right after this. I'd just like to know if you would be interested in a free demo of FlowTax, our GST solution. Please note that this demo will obviously be fully free. We will not charge or anything as such. And based on your requirement, your pain points, we'll be able to show you a demo of our solution. And we will arrange the demo based on your availability. So let me leave this poll on for the next 1 minute. As mentioned earlier, please note that our solution is very modular. We are hosted on the web. That is, it's a web hosted application. So you will type a URL and the solution will pop up. The platform offers filing, reconciliation, e-way bill automation as well. You can generate e-way bills at any point of time, modify them. And we also have e-invoicing automation. To mention if there are any technical guys around, our solution integrates with most ERPs, that is SAP, Oracle, Microsoft Dynamics, Navision, NetSuite, and other custom API integrations can also be done once evaluated. Great. So I see a good number of engagement. Good to see the engagement, guys. Thank you so much. Let me end the poll. All right. Thank you so much. Let me, without any further ado, introduce our speaker for the day, Mr. Akela S. Prakasa Rao. Just one moment. All right. Mr. Akela is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani, that is Birla Institute of Technology in Electrical and Electronics Engineering. Mr. Akela is also a gold medal holder who completed LLB from Andhra University in the year 2001. He's a certified fraud examiner as well, but currently not active in this field. He's worked in the CBIC, that is Central Board of Indirect Tax and Customs from 1994 to 2008. He's worked for KPMG Bangalore from the years 2008 to 2013. His other major stints were with Toyota Kirloskar Motor Bidadi from the years 2013 to 2016. And lastly, Biocon from the years November 2016 to June 2021. Mr. Akela is also a member of various indirect tax committees, which covers various trade bodies like BCCI, CII, FICCI, to name a few. He's also an active article writer in various tax forums such as Tax Sutra, TIOL, who addresses various tax issues. Aside doing webinars with us regularly, he's also a speaker and panelist on various tax forums on various indirect tax matters. He comes with more than 28 years of expertise in the field of indirect taxes with exposure in government, consultancy, and to name a few industry verticals like auto, automobile, and pharma. He has hands-on experience in GST, customs, FTP, SEZ, central and state excise, service tax, VAT, entry tax, to name a few. He's currently practicing as indirect tax advocate, assisting a large number of clients on all aspects of indirect taxes at all levels. So I'd like to mention, if there's anyone who's looking at tax-related advisory services, or if there's anything tax that you would like to address, please reach out to Mr. Akela. I will share his email ID and phone number on our post-webinar mailer. So I take great pleasure in introducing him on yet another webinar with us. I'm sure the audience is looking forward to directly hearing from you, sir. Over to you, sir. Thank you.
Thank you, Mr. Siddharth, for those kind words, and thanks for all the participants to take your time off on this weekend to attend this session. Yes, maybe the subject of today's webinar might give you a wrong impression that mastering, because GST is such a kind of a topic that if you are a master for today, you are master only for today. As far as tomorrow is concerned, then you were a master yesterday. But today, unless you update yourself, that you can't be boasting yourself as a master. So with these introductory words, that I just wanted to present the agenda for today, the regulatory updates, some important case laws, and the impact on the business, and the Q&A session. That is going to be the flow for today. Why I am selecting this is that if you want to master it, you should know what are the new things that are happening in the field. Then only that you can be a master in it, and that is going to give you all the more confidence that how to go about it. And in some cases, what happens, that law creates some kind of an ambiguity to you, wherein that the courts have to intervene, and then they have to clarify you that how the law has to be read, or that how the court wants it to be interpreted, because that we have to follow the law of the land. So the case laws are also going to help us in understanding and in structuring our business. So, with these opening things, I just wanted to bring your attention to one point, that if you are having any questions, you please post them in the Q&A. Those who are having any kind of a difficulty in typing the question because of its length or the way that you wanted to express it, maybe that you are not having the right words, maybe that you will be allowed to directly interact with me, then we can discuss orally, not a problem. But to the extent possible, that my request is that you please post your questions in the Q&A, so that at the end of the session that I will be able to take them. And I will be rushing through the presentations in order to save time, in order to answer your questions in live. Of course, there are some queries already that you have shared. So certainly that I am going to answer it during my course of this session. Siddharth, next slide, please.
Yeah, absolutely. So as Mr. Akela mentioned, please feel free to put down your queries on chat or Q&A. We will surely take them up. Yeah. Over to you, sir.
Yeah. So the GST registration process has been made more stringent post the special drive undertaken by the authorities in the May, July 2023. You must have seen that the GST authorities have gone on a rampage with the unscrupulous GST registrants, and then fake invoicing and all that during the May, June, July 3 months. And after that, they realized that they have to strengthen the entire process of registration, and they have introduced that eKYC, that Aadhaar linkage and all that. But recently, you might have seen a notification also that this Aadhaar linkage is compulsory only in certain states. Slowly, that they are going to expand its scope to cover pan India. And then they are now asking you to do the geotagging also, that on the Google Maps that you have to locate your exact premises, and then depending on the risk analysis, which that for which that they have developed robust systems in the backend, that they will be doing the physical verification also on need basis before issuance of a registration. So we have to be very careful when we are registering our premises, that it is a proper kind of a registration that we are going to take it, and we are going to run the business. E-invoicing has been made mandatory for all those above the turnover threshold of 5 crores effective 1st of August 2023. This is one other significant step to bring so much of revenue for the government. Every month that you must be seeing in the newspapers that our GST collections on month are clocking consistently 1.5 lakh crores. This is all success that I will say that it is all because of this introduction of the e-invoicing. So currently the threshold is 5 crores and above. E-invoicing is applicable, and shortly that you can see that this threshold limit will not be there, that everybody has to deal with the e-invoicing. That day is shortly going to come in. And then there is a mandatory reporting of this e-invoicing within 30 days from the date of document for those exceeding a turnover of 100 crores effective 1st of November 2023. This is one another step, that you cannot just generate an invoice and then keep it with you for time immemorial, that within 30 days that either you have to report it on the e-invoicing portal and do the actual supply, or otherwise that you are supposed to cancel this invoice. And then the two-factor authentication threshold has also been reduced to 20 crores, and auto population, the GSTR1 from the e-invoicing and the e-way bill portal is enabled, making way for the pre-filled 3B. So like what is happening in the income tax portal, if those who are filing the income tax, that they can see their annual statement, that what all bank accounts that they have, what are the interest that they have accumulated, and from the 26 years TDS statement that they will come to know that what all the money that they have received for which the tax deduction at source has happened by the payers, and all those data is available. And then you can cross verify whether those numbers are right or not before you file your return. On a similar pattern, even in the GST also, the government is now going to auto-populate your 3B, saying that, see, in the GSTR1 that you have declared so much of sales, and in the GSTR2B, so much of a credit has come to you. So this credit can be utilized to discharge your output tax liability, and your cash ledger is showing so much of money, and your credit ledger is showing it so much. So all those numbers will be auto-populated to you. So your job is just to cross-verify them. And if you are okay, then you can go ahead for filing the return. So this is one of the measures to facilitate the tax compliance, and it is also going to help us that what is the understanding of the government about our business, where we are. And if you frequently see that there is a discrepancy, certainly those points that you can bring it to the government's other notice, so that they can be sorted out. So this way the transparency is increasing day by day, and we have to be more vigilant while doing the transactions, because there is somebody who is watching, and he is accounting for us. So that is the point that we need to keep it in mind. Next slide, please. So the data analytics were strengthened to issue automated intimations seeking reconciliations whenever data mismatches are observed in the system. That you might have seen that a lot of notices are being issued. The minute you submit the 3B, immediately one notice pops out. It says that your 3B figures are not matching with the 2B reflected. So, and you have paid the entire taxes utilizing your input credit only. No cash payment was made this month. So please tell us what is the reason. So this kind of automated notices are getting generated because of the data analytics that the government is making use of. And now ITC is strictly restricted to the extent of confirmation available in the GSTR 2B. So one needs to be wary of this particular fact, that unless the supplier has collected the tax from you and paid the tax to the government and filed his return, that it will not get reflected in the 2B. Unless it is reflected in 2B, you will not be in a position to make use of it in 3B. Now, the 3B was amended to show ineligible ITC, reversed ITC, re-availed ITC separately, and the GSTN has issued advisory on Rule 37A also. You may also make a reference to Circular 170 in this regard. All these are very, very important factors for you, because the entire GST war is only on ITC, nothing else. There is not much of a classification dispute. You do not have any kind of a problem whether it is a goods or service. So the tax rates are also not so much of debatable issues. But what is always debatable is whether I'm entitled for credit on this particular invoice. That is where the entire world is looking at. And now that there is a 3 years limitation imposed from the due date for filing the periodical return. So if you have missed out any return, you can file such returns within 3 years from the due date of filing of such return. So these are some of the regulatory updates which you need to keep it in mind for your day-to-day compliances and for mastering the GST, as the title suggests. Next slide, please. Siddharth, next slide. Yeah. Section 16.2 is amended to make it mandatory to pay the supplier along with the GST within 180 days in order to avail the ITC. Here, important word that you need to understand is the supplier. Actually, it should have been put in bold over here, because the commercial terms can be that when you are receiving a supply, that you can pay on intimation to your supplier to his representative or the person named by him. But GST law very specifically says the way it has crossed its jurisdictions in prescribing the time limit for making a payment, that it should be paid within 180 days, come what may your commercial terms are. Similarly, it also mandates that you should always make the payment to the original supplier within 180 days, or that you have to reverse your input credit, and as and when you make the payment, then you can re-avail it without any kind of a time limit. So the payment should always be to the supplier. That is what is the important thing that we need to keep in mind. And then there was a confusion about the interest computation in the past, that when you have not made the payment to your supplier within 180 days, then you the earlier law used to say that you have to treat it as a output tax liability, add to it, and then you have to discharge the interest thereon under 51. Now that they have made that correction, So now it is going to be a reversal of the input credit, and it is not going to be added on to your output tax liability. So because of that reason, the interest computation subsection also got changed. And the law was amended for ITC reversal in the case of supply of warehouse goods before filing bill of entry as an exempted supply for the purpose of reversing the common input tax credit under section 17(2) and 3 in conjunction with rules 42, 43 of the CGST rules. This is another significant point for those who are keeping their goods in the warehouses, and from there only if they are making any sale. So technically speaking, when the goods are not cleared from the customs, the technically it is always the understanding that since the goods have not crossed the customs frontiers of India, so it is outside the taxable territory. Hence, it should not be subjected to the local taxes. But unfortunately, in this case, though they are not subjected to the local taxes, the warehouse goods when they are sold, what they are saying is that that turnover that you should be treating it as a non-exempted turnover, and then whatever the common input tax credit that you have, in proportion to that, you have to reverse it. So this is another onerous obligation put on us. But how far it is legally valid is something which somebody has to challenge it in the court. Then only we will be able to see. And then there is no ITC available for CSR activities effective 1st of October 2023, because this section 17(5) FA has been introduced from that date only, not prior to that. So there are two views which are prevailing in the market. Some say that CSR activities that you cannot take credit because it is not in or in relation to your business. And some of the AAR and AAR decisions also have taken up this kind of a position. But it is not about whether it is in or in relation to your business. But the section 16 also says that when it is mandated under any law, then the input credit is eligible to you. So CSR is something which is mandated under the Companies Act. Hence, when you are incurring such an expenditure, it is out of your business profits when you are doing the CSR activity, then the credit on such expenses should be available to you. But unfortunately, the revenue in their wisdom has decided that to introduce this 17(5) FA, and they have put an embargo now that the ITC is not going to be available for the CSR activities henceforth. So the question remains whether for the past period, whether I can avail the credit. My take is yes, you can take credit for the CSR activities prior to that date, but post that date, because the section E is putting this kind of a condition that you should not. But is it litigative? Yes, I will say, because it is mandated under law. How the government can say that the ITC is not going to be available is something which can also be challenged in the courts. Next slide, please.
So, sir, if you don't mind, let me just
Yeah,
quickly
please go
launch a
ahead.
poll. Yeah.
Sure, sure.
Yeah, I hope you're able to see this on the screen, team. So, have you faced any challenges in adapting your business processes to stay compliant with recent changes in GST regulations? So, please note that I will have a few polls that will be launched like this now and then. So, I'd like to see maximum engagement, guys.
See, by participating in these kind of a polls and all, that you are not going to be evaluated or you are not going to be ranked, but it shows that you are connected with the speaker and the topic that is being discussed, and then you are freely giving your views also, because that we are not going to announce any names, but we certainly like the more people to participate in order to elicit your views.
Absolutely, sir. So, audience, I'd like to mention we have about 48 to 50 people here with us, but there's only 22 people who have attended this. So, can we have at least 10 more?
Few more participants are requested to, yes,
Okay.
give their views on these polls.
Yeah. All right. Okay. Let's see if our engagement gets better with the next few polls. I will end the poll. We have about 25 people who responded, which is not bad.
And
Okay.
even the answering pattern also says that you are not facing any kind of a challenges in adapting your business processes to stay compliant with the recent changes. So this is a positive indication that a legislation like GST is not putting onerous obligation on you, and you are able to easily adapt to the nuances of it, which is a very good thing. Very
Right,
good
sir. Right.
positive response from the audience. Great.
All right. So
Yeah.
let me stop sharing this and sir, you can go forward. I'll launch a few polls at a later stage.
Yeah. Next slide. Yeah. So, some other things that those who are dealing with the extra neutral alcohol, that this is some debatable subject between state excise and the GST. Because see, the industrial grade alcohol, when it is diluted, it is going to be potable, and it is good for human consumption. So the diluted extra neutral alcohol is always a contentious issue that the state government says that I should be having control on it. But industrial alcohol, which is not a diluted version of it, is meant only for the industrial purpose. So the vapor thin difference between industrial grade and the potable is dilution percentage. So that is where that who should be having control on it. Now GST Council has taken an officially review that extra neutral alcohol used for manufacture of alcoholic liquor for human consumption is clearly outside the GST purview. Several times this clarification has come in, but this is the first ever time that there is an authentic confirmation in the form of a press note from the GST Council in its minutes. So the modalities by the state governments have to be framed on these lines. So let us see what it is going to be. And the admissibility of export remittance received in special INR OSTO account as permitted by RBI for the purpose of consideration of supply of services to qualify the export of services in terms of the provisions of subclass 4 of class 6 of section 2 of the IGST Act. All this is that now the RBI is permitting that the export remittances can be in INR, but the only condition is such INRs should come into special OSTRO accounts, which are going to be opened with the AD bankers. So if the export consideration is received in INR, that is also going to be counted towards your export obligation discharge. But it should be in the special OSTRO accounts. That is what is the important point that we need to keep it in mind. And section 261 of section 20, as well as amendment to rule 39 in respect to the same, clarifying that ISD versus cross charge were promised in the GST council meeting. So there was a lot of hue and cry about this ISD versus cross charge. So the GST council has promised that they are going to come out with a clarification, but as on date, there is no clarification which has come out. But they said that there is no strict guidelines that what is to be followed. This I'm going to cover it in the subsequent slides also in detail. And there is a limitation for filing of the returns, which I told that it is going to be 3 years. So that is made into law by this notification 38 of 23. Next slide, please. Yeah. So we are going to take up very important case laws which are going to have an impact on our day-to-day lives. So only such case laws that I am taking it in brief only because of the consideration regarding the time that we have. So one important decision which was coming from the Supreme Court in Karnataka VAT laws matter in a case between the state of Karnataka versus Ecom Gill Coffee Trading Private Limited. This is the Supreme Court decision, mind you, sir. So in this decision, what the thing that has happened, that one of the VAT dealers has made some supplies, but the recipient has made the payment, and then he received the invoices and he availed the input credit thereon. Now, the contention of the VAT department is that the supplies were never made, but undue credit has been availed by the recipient. So this is what is the what was challenged in all the courts, and ultimately in the Supreme Court, what they have told that the burden of proof to be discharged by the person claiming the ITC does not end by furnishing the original invoice or the proof of payment. So if you are simply having invoice in your hand and you say that against this invoice I made the payment, that is not going to be the end of it for you to avail the credit thereof. He needs to furnish the name and address of the selling dealer, details of the vehicle delivering the goods, payment of right charges, acknowledgement of taking delivery of the goods, and physical movement of the goods needs to be established beyond doubt. And it is also important to take note of Circular 183, which prescribes self or CS certificate for ITC availment in the case of late filers. This is not coming out of the judgment, but I am adding it because I tell you the reason. So these first two bullets are only the decisions from the Supreme Court. So what they are saying that you have to clearly furnish the name and address of the selling dealer, details of the vehicle delivering these goods, and then the payment of right charges and acknowledgement of taking delivery of the goods. I think all these are possible. But what seems to me impossible is the physical movement of goods needs to be established beyond doubt. So the VAT laws. So how it is going to be relevant for GST? But unfortunately, after the pronouncement of this decision by the Supreme Court, several GST cases were decided by various high courts across India, keeping reliance on this particular decision. And then in one of the cases, they have gone ahead to the extent of this particular line has been exploited by saying that you have to furnish the toll payment charges, the proof of toll payment charges. So physical movement of the goods needs to be established beyond doubt has been interpreted by one of the high courts saying that all the toll payment charges also that you need to keep track of. So just imagine the kind of problem that you are going to have on your head. Then you are not able to see the input tax credit in your 2B, but still it is a significant amount which you want to claim. Then what you need to establish is the physical movement of the goods also needs to be established that the goods were actually supplied to you. So the toll bills, think of a scenario from Kanyakumari to Kashmir, some shipment has gone. How many toll gates it will be crossing? And God knows that who had given that vehicle for the person who has undertaken the freight. It may belong to him or it may belong to somebody else and which he has taken it on hire. So is it practically possible for somebody to collect all the toll bills nowadays that because of the FASTag, that it automatically gets deducted from your FASTag account. So you need to take down the statement of the FASTag during the movement of these goods, and then you have to keep that also as one of the documents as important as your invoice in order to claim ITC. I don't think that humanly, whether the authorities or the judiciary who has given this kind of a decision have thought about the practicality of this issue. But the high courts have relied upon this particular judgment, and then they have further said that even the toll charges are to be furnished in order to claim the ITC. And in this relation, I am drawing your attention to the Circular 183, which has given much sort of relief for many SCs, wherein that they said for the periods 17, 18, 18, 19, 19, 20, for the past periods, wherever that the 2B is not present during those days, but still that you have availed the credit, but it so happened that the payment particulars are not readily available for the department also. In all such cases that they said that if the total ITC that you have availed from one particular supplier is less than 5 lakhs, then a self-certification from him. And if it is beyond 5 lakhs, then a chartered accountant's certificate that the tax has been duly paid with the government and the returns were also filed. If such a letter is there, based on such letter, the credits can be allowed is one of the instructions in this Circular 183. So taking advantage of that, that you can answer the recent show cause notices that you might have received for the period FY 17-18. because for the FI 1718, as per the notification 9 of 23, the normal period for issuing any demand ends on 30th of September 2023, and many SSUs must have received such kind of a notices, and in most of the notices, the litigation is about ITC. So in such a scenario, these two decisions can be taken help of, but the only thing that the e-com gill coffee trading is going to be helpful only in the case of supply of goods, but it doesn't talk about anything about supply of service, where if you are having the same kind of a problem, then how to go about, because in the supply of services, there is no physical movement. Hence, to establish the movement, it's not there, but all other factors are something which you can show evidence. So that's the only difference. So this is the one important decision, though it was given in the erstwhile tax regime, but it is equally applicable, and already many high courts have taken cognizance and have applied it in the GST regime also. So one needs to be aware of it. Next slide, please.
Sir, just a quick poll, okay?
Yeah,
I'll
please
just
go
take a
ahead.
minute. Audience, I'd like all of you to quickly check your chat. I'm going to paste a link here, which will redirect you to our LinkedIn page. We have a poll that's been running from this afternoon. So please click on the link on the chat and you will be redirected to our LinkedIn page. We have a poll running there. Let me just read out the poll for all of you. So request all of you to spend about 5 to 10 seconds to quickly answer that and come back here. Let me just read it out anyway. Which aspect of GST compliance do you find most challenging for your business? Now, there are four options here. The GST filing and returns, or is it input tax credit management, or is it GST rates and classifications, or handling GST audits? Which is it that you think is the most challenging when it comes to GST compliance? Request all of you to quickly attend that and come back to our page and we can get going. Let me just see how many votes we have. Okay, we have about 5 so far, not bad. Can we have a few more votes on that end? And audience, we also constantly put up GST updates on our page. So those of you who would like to see that can gladly follow us, and we would will be happy to have you on our page. And I see a lot of queries on the chat. Good to see them. Please note that we will address all of them one by one as the slides come
Rather
to
than putting it on chat, please put it in the Q&A box.
Yeah. Q&A would be better, guys. If you are able to copy paste it and paste it there, nothing like it.
No problem. It's already there in the chat, that we'll address it.
Yeah. Okay, audience, good to see the responses on our page. If you are still able to attend and come back, nothing like it, I will hand it over to Akela, sir. So you can go ahead. I'll go to the next slide.
Yeah. So, some people will be having a doubt that what is the actual return and all, that in the past that 3B was held to be a regular return under the GST. Now in the Bharati Airtel case, the Supreme Court has said that 2A is only a facilitator. And then there is one judgment by the Calcutta High Court in the matter of Suncraft Energy Private Limited, wherein that they said that before reversing the input tax credit by the SSC, the assessing authority should take action against the selling dealer if it is found that he has not deposited the tax paid by the SSC. So unless the collusion between the SSC and the selling dealer is proved, the input tax credit is not to be denied if the SSC has genuinely paid the tax to the selling dealer. It's much to the relief of the persons who are availing the ITC, wherein that it is not the onus only on the person who is availing the credit, but equal responsibility is there on the department also to go behind the unscrupulous suppliers. So this decision is in that context. And then Patna High Court, in the matter of Asta Enterprises, said that the burden to prove the actual physical movement of the goods is upon the purchasing dealer for availment of the input tax credit, which I told you that the toll bills are going to be insisted on based on this particular judgment only. So the next slide, please.
Sir, just a minute. Yeah.
So similarly, in the case of Commission of Commercial Taxes, Ramway Foods, the court has held that primary responsibility of claiming the benefit is upon the dealer to prove and establish the actual physical movement of the goods, genuineness of the transaction, and if the dealer fails to prove the actual physical movement of the goods, the benefit cannot be granted. So again, that they are emphasizing on that particular point. So these are all the case laws about the ITC. So these are going to help you in defending your show cause notices for the financial year 17-18, wherever the ITC is majorly the disputed item. Then in one of the chats or the questions, the person is asking about the GST applicability on the secondment of the employees. So this all issue started with Northern Operating Systems decision by the Supreme Court on the expat employees' salaries in India. This is a unique case wherein actually if you go through the case facts, because that itself is going to take an hour session exclusively that we can take up discussion on that particular point. But because of the paucity of time, I'm not going to the details. But those who are interested, please go through the Northern Operating decision by the Supreme Court, which elaborately discusses about the conditions under which that they have come to such a conclusion. Of course, that it is always a debatable decision because that the kind of amount of nuisance it has created in the GST era that we can see now. So the Northern Operating Systems have got a unique kind of agreement with their employees in which that they are making payments to their overseas companies, and then the overseas companies in turn are making payments to the expat employees who are serving in India. So in such a scenario, that the court has come to a conclusion that the service tax is applicable in all such cases, and extending the same logic in the GST also, that the GST applicability is also been confirmed. So taking clue from this, the revenue authorities, left, right, center, wherever the expat employees are involved, are issuing show cause notices. But all these are not going to squarely fit into the four dimensions of this Northern Operating System. So in order to distinguish the case facts, one needs to go through the agreements meticulously and bring the difference and why the Supreme Court decision is not applicable in your case, that you need to establish in your defense. And such successful attempts are already made by Tata Kirloskar Motors in Karnataka High Court, and Centrica India Offshore in Delhi High Court, and Mitsubishi in Punjab and Haryana High Court, wherein already the on a similar matters stays were granted, and the matters are going to be disposed of in the coming days, and then we can see how exactly the Northern Operating decision is going to prevail in all these other matters. And then there is a lot of human cry about the taxation of the game of skill and the game of chance. So currently the matter is pending in the Supreme Court in the case of Gamescraft against the decision of the single member from the Karnataka High Court. But several other high courts have already taken up this issue and granted stays, because here there is a distinction between a game of skill and a game of chance. And similarly, that when whatever may be the game, if somebody is putting a bet, then whether it becomes a game of chance, even in a game of skill, if somebody is doing a betting, see, cricket is a game of skill. But if you are going to put some money and say the next ball is going to be hit for six, then that particular activity is game of chance. It is not a game of skill. The person who is actually hitting the ball is exhibiting his game of skill. But the person who is putting his money in order to see the outcome, whether the ball is going to go for a six or not, he is taking a chance. So he is playing a game of chance. So here, when you want to tax it, how exactly the difference has to be understood, and what should be the levy, and what should be the valuation. These are the important things for which the CBIC, after discussions in the GST Council, has come up with the entire taxation very recently. So when the demands are issued right from the first day of GST introduction, now how far these demands for the past period, when the taxation, the tax measure and the tax levy are not there in the law are going to be valid is one interesting thing that we need to see in the coming days. So let us wait for those decisions to come in. And similarly, on the ISD versus cross charge, the GST Council has promised that they are going to come out with a clarity that how to go about it. But the RRR decision in the Columbia Asia and Karnataka High Court decision also in the Columbia Asia matter, and the RRR decision, the Cummins India and Maharashtra on the cross charge. These have largely settled the matter as far as revenue is concerned, that what is their view that they have told. But unfortunately, in the field, that the confusion is still prevailing. So we are always confronted with the question that a particular expenditure, whether we need to do distribute it under ISD, or that we have to do a cross charge. So I will give one simple solution for you, that if you are having a single PAN under which several GSTNs are existing, in all such cases, better that you have a ISD in place, and all common expenses that you please place the purchase order also from the ISD registration, and then take the expenses into the ISD, and then subsequently you distribute the credit using the ISD mechanism. But there are companies who are having several PANs under them. So in such a scenario, it is always suggestible that you take the entire expenditure in one of the GST numbers, and then to other the GSTs under that you should be distributing the credit using the cross charge mechanism. This is an ideal way of doing things, but we do not know exactly that what can be the clarification which was promised in the 52nd GST Council meeting. Let us wait and see. But in the meanwhile, if somebody wants to have any kind of a thumb rule that what needs to be followed, I think that this can be adopted as a thumb rule for distinguishing between ISD and the cross charge. Then one other important decision that has come very recently that I just wanted to bring your attention to. This 9 of 23 is a one notification by which that the authorities have extended the time period for issuance of a notice in the normal circumstances. You must be knowing Section 73 and Section 74 of the laws talk about this. 73 talks about the normal period, 74 talks about the extended period. So the normal period means that they are not going to allege any kind of a mens rea wherever there is a tax demand is there, and it is in the knowledge of everyone, and then it has to be demanded from you. So the law says that 3 years is the time period from the date of filing the return for that particular tax period within which that the demand can be raised by the department. But for 17-18, if you strictly go by this 3 years period, that it is already elapsed during the COVID period. So in one of the provisions of the law, that they have created an option for them to extend the show cause notice period beyond a particular date, then there is a force majeure. So there should be a force majeure in order for the government to extend the notice period to beyond 3 years. So going under that, this notification 9 of 23 has extended the notice period for 17-18 to 30th of September 2023, 18-19 to 31st of December 2023, 19-20 to 31st of March 2024. Because of that only, you could see that thousands of notices were issued on or before 30th of September. Now, for sure that you are going to get a new year notices on or before 31st of December 2023 now for the financial year 18-19. Similarly, at the closure of this financial year 23-24, all the demands pertaining to the period financial year 19-20 are going to be issued on or before 31st of March 2024. This is all because of this 9 of 23 notification, where it says that it is drawing powers from the law, in which the important condition is there should be there should exist some force majeure in order to extend the time period. So this has been challenged by one SSC, Graziano Transmissioni India Private Limited in Allahabad High Court and SRSS Agro Private Limited in Gujarat High Court, wherein the court has issued notices to the revenue for their reply. So this is going to be one interesting case law. The developments we need to watch because this is going to have a bearing on the so many number of notices which got issued very recently and which are going to be issued now, as I told you, as per the timelines. And definitely, this is something that these case laws are to be followed by all those who are practicing in the indirect tax, that too particularly in the GST. So I thought that these are important things that we should be keeping in mind in order to master your compliances and to give more comfort to your managements. So I think that I'm coming to the end of my session, except for small advisory out of the 3 decades of experience that I have with the indirect tax field, which is there in the next slide. Siddharth?
Yeah, I will just move to the next slide. But sir, just one moment, okay? I have 2 more polls. I'll just launch one right now, and before we take queries, I'll launch one more.
Yeah.
So audience, how often do you conduct internal GST compliance audits within your organization? So there are obviously 4 options here. Is it on a quarterly basis, annually, or do you do it occasionally or rarely? Let me leave this poll on for the next 1 minute. And I have one more poll, but I would obviously have to pass it on to Akela sir because we have another slide followed by which we will launch it. Audience, please stay tuned because we will be taking up the queries as well right after this. So if there's anyone who'd like to directly interact with Mr. Akela, I'll be able to do that as well. But we will take up all the queries that are on chat and QA first. Okay, great. I see majority are mentioning it is done regularly, which is great. Okay. It's still going. Let's see if we can get 30 responses. At the moment, it's 26. And we have almost 50 people still. All right, one more response and then I think I'll end the poll. Great. Okay. Let me just share the results so that the rest of you can see it. As you can see, we have 50% who are mentioning that it is done regularly on a quarterly basis.
This is really heartening to see such a kind of regularity that people are conducting the internal GST compliance audits. That is really good. Really, really good.
Agreed.
I think this is what is the reason that the government is consistently getting 1.5 lakh crores of revenue every month. That unless you do this kind of a diligence and all that, we'll end up in litigation and so much of a revenues do not come to the exchequer. It's really good that we are having very compliant SSCs with us as our participants. Good to see that.
Absolutely, sir. Let me stop sharing and I will move to the next slide. Yeah. So this is the last slide.
Yeah. So this is what the important thing that I just want. This is a piece of advice from my end. The businesses need to be extra vigilant in order to secure their ITC, which always will be the bone of contention between them and the revenue. So, but after seeing the poll where the majority of the people are conducting their internal GST compliance audits and all on a quarterly basis is really heartening to see that. I think that you are taking care of your business. In order to secure the ITC, the business needs to have digital monitoring of their transactions at every level in a meticulous manner, and this can be achieved only by going in for a digital mode by adopting the ASP, GSP, and the robust ERP in place. And this is where it is not a marketing pitch, but definitely I'm telling you that tracking the input credit to the extent of the toll charges paid at each toll gate your vehicle is crossing is going to be Herculean task manually. So that is the reason my sincere advice is embrace the digital mode. Go for the ASP, GSP like our flow solve. and fruit tax, which is going to give you all the more comfort. And second thing, keeping this data, that is the same thing that I'm going to talk about. The details to capture and store the records is voluminous and cannot be done manually by any stretch of imagination. Why it is becoming voluminous is it is not just about one invoice. What you need to keep track of, that behind the invoice, that who is the freight forward person who has undertaken the freight service for you, and what all the toll gates that he had crossed, what are the amounts that he has paid. All the data, if you have to capture against one single invoice, just imagine if you are working in an organization which is having some 1,000 crores or 10,000 crores of turnovers, then what will be the state of it? So that is the reason I'm telling you, I'm urging all you people that you need to impress on your respective managements, or if you are in a decision making position, then certainly you should go for automation of your systems. And furnishing the information during audit or investigations after a considerable lapse of time will be tedious in the absence of process automation. Now, for 17, 18, that they are going to ask you one particular invoice, one line item, that the classification issue or the quantity, whether you have fully received it, how to establish that you have received the supply, the physical movement of the goods. So this is all going to be that you have to pull out the data after 8, 10 years. So humanly not possible. If this matter is going to be litigated further, and if it is going to go from the lower levels to the higher levels and all, then you can imagine that how many years that you have to keep this data intact in order to justify your case. So because of these reasons only, I am urging that the process automation is the need of the hour and one should go for it. So with this piece of advice from my end, that I think that I have come to the end of my presentation. I am open for the queries. So if any other poll is to be launched by
Yeah.
Siddharth, you please do it so
Yes, sir.
that we'll go to the chat and then QA box.
Absolutely, absolutely. So, audience, thank you so much for your time on the presentation. Please stay tuned as for the next 15 to 20 minutes, we will only do queries, and trust me, it will be an engaging session. So, let me just quickly launch one poll, followed by which we will get into the Q&A. So, audience, this is my closing poll. In your opinion, what is the biggest benefit of mastering GST compliance for business success? Is it cost savings as per what you think it is, or is it improved credibility with your authorities? Enhanced financial management, which again links with cost savings? Or is it competitive advantage? Or if there's anything else, please let us know on chat. Or if you think it is all of the above also, please let us know. Since I see a lot of inputs on the chat, we will take it up one by one. I think I will have to scroll up all the way. Mr. Akhil, I'll coordinate with you on this, sir. I think we'll have to go up all the way up.
Not an issue. I'm used to.
Right, right. Okay, great. So about 22 responses so far. Can we have a few more? We still have a healthy number of audience with us here. And I see 3 participants have raised them. Mr. Lohit, Mr. Venkatesh. Yeah. So let us know if you'd like to interact with Mr. Akela directly. If that's the reason you're raising your hand, I'll be more than happy to directly get you to talk to him. If there's anything else, please let me know on chat. Okay. All right, we have Mr. Srinivasan as well. Okay, good. Let me end the poll, and I'll just share the results to show you that I see a majority is improved credibility with authorities. Interesting. Then we have followed by that enhanced financial management and cost savings. Mr. Akela, would you like to round up this poll with any comments, sir?
Yeah, definitely, because this is what is the most important thing, that being a compliance guy, that you need to establish credibility with the authorities. Otherwise, what happens time and again when you are receiving notices and all, and then you are presenting your replies, that unless you establish that credibility with the authorities, that it is difficult for them to even get convinced. So I think that all these participants, majority of them have struck the right note, and enhanced financial management is also an equally important thing, that is the benefit of mastering the GST compliances. I think that we are having a very good educated audience, and they are also by engaging us in the dialogue also, which is a good thing to see. So it's
Totally,
not
sir.
a monologue. So the dialogue is what I always like it. So good. Now that to your specific queries, that I'm taking up the chat
Yeah.
points right away. So somebody is asking about DRC 1B impact. So I am unable to understand what exactly that he means to say when it is a DRC 1B, because DRC 1B is something wherein that whenever you have any difference between your GSTR 1 and the GSTR 3B, then this DRC 1B proceedings will start. So what is the impact if you ask that if you have got your output tax liability the way you have declared, but you did not pay for all the output tax invoices that you have accounted in the GSTR 1 in your GSTR 3B, that is where that the proceedings under DRC 1 are going to kick in. So the impact will be that when the notice comes, that you need to give a reply that why at all, that if there is any kind of a credit note issue or some sales were erroneously reported or such a kind of a things. So that is the impact that I could think of. So beyond that, if you have anything specific, that I will be glad to answer that also. And somebody else is asking about latest updates in the GST. I think that is what that I have covered in the first few slides about input reversal and the reclaim. So input reversal and the reclaim, that is the GST and advisory on this newly introduced 37A. So that is where what you have to see, that if you have not paid to your supplier within 180 days, now it is time for you to identify all such things and immediately reverse them. And as and when you make the payments, then you can reclaim it. So under table 4, that you have got different columns that you need to understand them properly, and then you have to report your numbers accordingly, so that at the time of reclaim, that you will not be facing any kind of a challenge. And then 88A availment is somebody is asking. So this 88A availment is actually all about the order of utilization of the input tax credit, wherein that they told that IGST has to be utilized first and then followed by the CGST, SGST. That I think after 6 years, I don't think that anybody is facing any kind of a challenge. But if you have got any specific query about this 88A element, we can discuss that, sir. Not a problem. And if we have to pay interest under Rule 42, even we are having balance in credit ledger. See, if I have understood it right, that there is an obligation for you to make some interest payment. So your question is, when I am having a balance, it is not about the balance that you can see today. What you have to see, that ever since that this erroneous credit has been identified in one of the previous returns, from the date till date today, that if your credit balance is exceeding the erroneous credit that you are supposed to reverse, then in such a case, that there is no need for you to pay any interest. But if at any point of a time that your reversal is 1,000, but whereas your credit balance has fallen short of this 1,000 and became 900 or so, then from in that month that you are supposed to pay the interest for the differential amount. So it is the same kind of a computation. If you are familiar with in the previous tax regime in the central excise, that whenever your input credit balance is falling short of the erroneous credit that you are supposed to reverse, then only the interest clock will kick in. Otherwise, no interest. And then impact on notice under DRC 01C. See, impact, if you are asking, that I will not be able to, because that you have to tell me what is exactly the notice that you have received, so that we can analyze and then we can tell you what exactly it is. But as far as DRC 01C is applicable to various types of scenarios, wherein that if you have not filed for the previous time period, then you will not be able to file it now. And it again talks about the differences in the ITC claimed by you between GSTR 2B and 3B. That is where I told you that you take advantage of circular 183, wherein that for the past periods, how you can account for the differences in the ITC has already been detailed. So if you follow those instructions, I think that you can come out of this DRC 01C proceedings. Social security is paid by the overseas but not reimbursed from the Indian company. Is there any impact under the GST? Absolutely no, sir. Because if there is any money which is going out of India, then only all the tax problems come. If the overseas company is directly paying the social security is there itself and it is not cross-charged to you, I don't think that there will be any impact under the Supreme Court decision in the matter of northern operating. You need not worry about it. Let us move forward these slides on the speaker. Okay. We are filing an appeal in SESTAT for an old service tax case. We are required to pay the pre-deposit. Our ASS login is blocked and unable to log in. Our GST range officer is unable to open. Now, how to pay the pre-deposit? Sir, for the past tax regimes, how you have to go about it has already been given. So you can go through the ASS portal, which is going to give you, even if it is blocked, that the jurisdictional officer should be in a position to unblock it for you when you make a request. If he is not able to, then I think that you have to escalate the matter to his higher ups that they should come to your rescue and you should be in a position to make that payment. What about mutual fund investments and gains where we have to show GSTR return? Sir, it is a pure transaction in money. So where the GST, where you have to show it in the GST return, there is no mandate. The company is having money and they have invested in the mutual fund. There is no GST implications wherein that in the return that such kind of disclosures are required. I'm wondering if you have any specific case, you please let me know. What is the GST provision for the ITC availed within 180 days but paid to the vendor after 180 days? Sir, before the end of the 180 days, if the payment is not done, first you have to reverse it with applicable interest. And as and when you pay again, then you can avail the credit. That is what that we have discussed about this new 37A GST and advisory also. Sir, Tran 1 ITC availed on stock hold, pre-GST purchase invoice sold to Bangalore branch, shipped to Chennai branch, excise credit availed on Chennai branch, Tran 1 also availed in Chennai branch, Tran 1 also availed credit, now denied GST department, Bangalore only can avail credit. Please share the clarification on this. Okay, so in this case that there is a problem, I agree, because what has happened that it is a bill to ship to transaction. So any bill to ship to transaction will be closed only when the billing party issues another invoice to the shipping party. It is not a matter of a customs transaction wherein the recipient is liable for making a payment and then he is in a position to avail the credit. So this being a GST transaction and all, or the central excise transaction, so the billing party only can avail the credit. On the confirmation received from your Chennai branch, Bangalore branch should have taken the credit and then Bangalore branch should have transitioned that credit to Chennai branch by raising another sale invoice. That's how the bill to ship to transaction has to be closed. So the GST department is right in asking this. So I think that you are on a weak wicket in this particular litigation, but depending on the case facts that maybe that I will be able to help you. So this is something which we need to discuss offline only. But prima facie, as per the conditions, that the officers are right in their demand. What is the current condition on GST charge and interest on personal loan availed through credit card? Since as per the latest Calcutta High Court order against the Citibank, sir, if it is a personal matter, then 20 lakhs and all that will kick in, no? So if the interest is crossing the 20 lakhs only, that the problems may come. But if you are asking whether the court, whether the bank has to charge the GST on the interest component, that is a separate discussion. So we need to be, you need to be very specific for me to analyze your query and answer back to you. Because that you are talking about the personal loans. That is the reason. The e-way bill value 4 crores, e-invoice value 40 lakhs. How to rectify the same within 24 hours? Not done. Sir, when the time period is given for you to make a correction, that you have to adhere to those timelines. Otherwise, that you have to explain by way of documents what is the transaction and why there was an error, and to say also say that it is a clerical error only, and you should be given some kind of a relief. So it is something to do with your credibility with the revenue authorities. ISD has time bound, which is not there in the cross charge. See, in a way, you may be right, but that doesn't mean that wherever you can interchangeably use ISD and cross charge, because all of a sudden you cannot do a ISD distribution unless you have a ISD registration in place in the first place. But cross charge is something which can be done by anybody. So if you ask me what are the pros and cons of having an ISD or having a cross charge and all, that we can debate on so many points. But the point what you need to keep it in mind is that there should be a thumb rule by which that you have to distribute the credits under ISD or the cross charge, that you have to take a business position. So in that case that I have suggested the thumb rule what you can follow. I do agree that ISD is time bound and the cross charge is not having. Point taken. But that is not going to decide which method you need to follow. Is it mandatory to mention the ineligible ITC in the 3B returns? Yes, sir. From now on, that you have to declare what is ineligible permanently and what is ineligible temporarily, and which is going to be reclaimed after some time, like the 180 days payments and etc. So as per 2B, can we upload the vendor details invoice wise available in 2B, just putting ledger name, upload the same in the ERP after receiving the physical invoice can be verified and post? I'm unable to understand, Malyadari, that you need to explain me this, that 2B is not something which you can upload, right? It comes out of your supplier's GSTR1 data. So 2B is something which you can cross verify with the physical documents that you have at your end. So you cannot do anything. So you need to explain me in detail that what exactly that you meant over here. I am unable to understand from the way that you have positioned it here. Now I have completed all that it is there in the chat box. I am coming to the Q&A.
Yeah.
Can we use credit ledger balance for payment under Rule 42? That I have already answered it in live. And then social security is paid by the overseas, that I have already answered it in live. And presently we are following cross charge method instead of ISD, so on basis of council meeting. Should we shift to? See, it is not a decision wherein that you have to shift from cross charge to ISD or vice versa. What I'm telling you, that under the same PAN, if you have a multiple GST registrations, it is always suggestible that you have an ISD also, and through that ISD that you issue the purchase order and receive the common services in the ISD, and subsequently you do the distribution. But if you are having multiple PANs for your businesses, like a group of depends on your particular convenience, that what is your kind of a business setup, what are the kinds of registrations and PAN cards that you have, you can take a call on that. And then purchase of art paintings for office beautification. Sir, this is something not in or in relation to your business. So the credit is going to be denied. Please to know whether one-to-one matching is required in ISD. See, what is one-to-one matching? I am unable to understand, Mr. Srinivasan, because see, in the ISD, that if two of your GST registration numbers are commonly sharing that service, say the service value is 1,000 rupees, and in a 60-40 ratio that they are putting it to use. So you can place the purchase order from this ISD registration to the vendor. He will commonly provide the service to two of your GST registration numbers, and in 60-40, 600, 400, that you can distribute the credit to the two units. You need not distribute to all the units, because these are the two units which are exclusively utilizing those services, shared services, hence that you have to. So one-to-one matching means, yes, one thing is sure, that in the ISD, once you do the distribution, you should not be left with any credit at the end of the month. Every month your ISD opening balance zero, closing balance is zero. that you have to maintain. And whether existing ASP GSP from WebSolve will take care of the toll gate data for each supplies made, I think this is something which Siddharth has to answer, not me. So all the queries in the Q&A also that I think that I have completed. TDS, TCS, how to claim from the e-commerce operator. It is through the returns only that it has to come. There is no special mechanism. But yes, if you have a ASP, GSPs and all, that they are able to help you in this regard. Like the way that the airline and ticketing services and all that, that they have got specialized programs for it, through which that they will be able to help you in claiming such credits in the like the TDS, TCS also, that they will be having some APIs or something that they will call using that you can claim them. So I think that I have answered all the queries. Those who have raised their hands, maybe that I can take them.
Yeah. So, Mr. Lohit, would you like to interact with Mr. Aguirre directly? I'll be able to allow you to talk. That's the same for Mr. Venkatesh and Narayan. So let me just quickly unmute. Yeah, Mr. Lohit, you can unmute. Mr. Lohit, you're there? Okay. We will keep him on hold. Let me quickly go to Mr. Venkatesh. Mr. Venkatesh, you can also unmute. Okay. Okay, I think he's not around here now. All right, Mr. Narayan, do you have any query or something? I have allowed you to unmute. You can unmute and talk, sir.
Yeah, good evening, sir. I'm audible, sir?
Yes,
you're audible.
please.
Yeah. Thank you. Good evening, sir.
Thank
Given
you.
the answer of my queries, but just
Okay.
can you share your thoughts on that, whatever I raised the query regarding the social security?
See, what you are saying, the social security has been taken care by your company outside India to the employees who are deputed to India.
Yes.
And they are not asking you to do the cross charge, that you are not paying for it.
No, because that employees salary paid in India, okay, agreement did in India, so no cross charge for related that employee to overseas and India. But as per his country's rule, they are overseas company paying the government that social security charges.
That's right. See, this expense was taken care outside India, and there is no money which is going out of India to meet this expenditure, right?
Right, sir.
So there is no GST. See, GST comes into the picture only when you are making any kind of a payment. But in a related party transaction, that they may say that there is a social security expenditure also which is incurred by your related company. So even without consideration, it is going to be taxable, such a kind of an argument that they can put up. But see, we need to evaluate your case facts, because the expat employees, when they are deputed from your overseas company to your Indian subsidiary here, then if they are being paid the entire salary here, except for the social security, which is taken care by your overseas company. So whether this salary that you are having a separate employment agreements with them, or that you have got one agreement with your parent company that so many people are going to be deployed over here, and then I am going to pay them. So it all depends that how you are going to have, and what is the kind of a control that you are exercising on these people, and what is that these expat employees are doing service. Are they doing service for their overseas parent, or that they are working for the Indian company?
No, they are working for the Indian company only.
So these are some of the points. If you go through that's why I told that the northern operating itself is a very interesting topic, and which is going to take at least 1 or 2 hours for us to analyze it and all that. So you should take time to go through the decision and see whether your facts are also exactly matching. If they are matching, then there can be a liability. If they are not matching, then you can be rest assured that no GST applicable. But on the limited issue of social security being met by your overseas company, and no payments are made towards it from India to your overseas company, no GST liability.
Right. Understood, sir. Thank you.
Thank you.
Thank you, Mr. Narayan. Okay. Anyone else who would like to directly interact with Mr. Akela? We have another 5 minutes before we wrap up for the day. Okay, Mr. Ravindra. Yeah, just a minute. Mr. Ravindra, was there a question? Just saw you raise your hand. That's right. Okay. Anyone else, audience? Any questions for Mr. Akela? Also, audience, in the meantime, just a kind request. Yeah, Mr. Mailadi is there. Just a moment. Just a kind request here, audience. I'm sharing a link again, which is our poll link. I would just like a kind request from my end if you can comment on our post, on the same poll post on the webinar, just to see what your reactions were. Of course, Mr. Akela has stretched his time for answering queries and a rather insightful presentation as well. It would be really great for us if you could just comment, like, it could be a few of you also, in fact, 2 or 3 comments, just to get a feedback of the webinar. That would be great. Again, on the same link that I shared, this is our poll link. You can simply click on the comment on the poll post and put down your comments regarding the webinar. And you can also mention Akela sir if you'd like. Okay, and coming back to the queries, audience, any further queries? I saw Mr. Mailadri.
Yeah, Mr. Malyadri wanted to ask something.
Yeah, and also Mr. Ravindra. Any queries, Mr.
Yeah,
Ravindra and Mr. Narayan, Mailadri? If you have any queries, if you'd like to interact, please mention it on chat saying yes. I'll be able to unmute and give you the option to talk. Mr. Malyadri? Okay, yeah, just a minute. Yeah, you should be able to unmute now, sir.
Okay, sir.
Yeah, we can hear you.
Sir, my query is as per 2B, every month we are issuing the data from vendors.
Right.
Right, sir. Every day, as per invoice, we are booking the ERP invoice. Instead of doing that, we know the vendor wise what is the ledger we have to update. The 2B, as per 2B, we will put one ledger column and we upload it in the portal, GST, in the ERP portal. Then after issuing the physical invoice, we will verify one by one and we'll post it. That is a reduce our workload, sir.
Yeah, see, what you are saying that you are going to create a temporary ledger wherein that all your receipts as per the 2B that you are going to post it there.
Yes.
And after receipt the physical invoice that you are going to verify in in this particular temporary ledger, and then you will take it to 3B for availing it and all that.
No, not 3B. I'm talking about so financials updation, financial updation.
See, ultimately that once you take the financial updations, that you will be utilizing it for your discharging your liability, or that you will be seeking it as a refund, right?
Then we will follow.
So it is a good practice.
What
you are saying is a good practice.
Yes, then
that
we will
everybody is maintaining a temporary ledger wherein that they are posting this 2B data, and then after receipt of the physical invoice and all,
verify and post.
Yes,
financial will be updated. Financial will be updated. Then our workload also will reduce. Then 2B and books will be matched. No need to worry again doing.
No. Very good decision, and in fact that a very good practice which you are saying that it is being practiced by some, but in a public meeting that you have now pointed out, this is a very good thing, sir.
Yes,
that others also can follow it.
Even the department itself develop this. If they put the ledger name also, suppose staff welfare like that, if they give, based on that we can blindly post it in the financials.
Sir, maybe that a day may come that they will
because this. Multi kind of expenditure will come, sir. Like
I fully agree with you, but it takes a lot of effort by the department to cater to these many SSCs. So from your side, when you are doing this proactively, that is really a good thing. And it is a good practice for others also to follow.
See, sir, suppose invoice taxable value or everything is different with 2B, then we can modify immediately.
Yeah. Kashinath, he is not saying that he is going to avail the ITC, sir. What Malyadri is suggesting is that in the temporary ledger that you park the 2B data, and once you physically receive the goods and the invoice copy also, then he is going to take it to the actual financials. So this is a temporary ledger what he is maintaining. So he is not availing the ITC, sir. You are also right that you should
Yes,
not be
yes.
availing ITC till you receive the goods from the invoice. So Malyadri sir is not suggesting you that you take ITC.
The ITC will not take, sir. If after
Because
booking the invoice, original invoice
Kashinath
comes only, we will take.
Kashinath made a comment in the chat box while
Yes.
we are discussing on this issue.
Yes, yes.
So I am addressing to that also.
Okay, okay. Then one more thing, sir. Suppose
Yeah.
I have in 2B data is there, sir. Invoice is already updated. In 2B it is there available.
Right.
But in books we are accounting next month. That means of November or December. Then can I avail this?
Yeah, in the next month you can avail. No problem.
When we accounted that time only we can avail.
Yes.
Suppose after 2 months we will account in the November we can avail. Suppose it is there in the 2B November. I accounted in January. Can I avail in November also? And January I will not avail.
Means before after the end of the
because
financial
sir,
year, before
sometime
filing the final return.
No sir, sometime we will receive the invoice late, but in 2B it is appearing.
No problem. Once it is appearing in 2B before November of the next financial year, if you are availing it, absolutely no problem, sir. You are on the safe side.
No, in the month on month, sir, I am talking about, because you see, sir, after in the month of October, 20 lakhs ITC is going for November because of invoice delaying, GRN delaying.
Right.
That how can be avoided, sir?
Because see, in the 2B of the previous month when it is available, see that now in the new table 4, that if you see, that column 4, that whatever the credits that you are deferring also will be coming. So this can be deferred as if that you did not make the payment to the vendor. See, if you are not made the payment to the vendor, what you do? You will not avail the credit, right?
Correct.
So the way that you are deferring it, you can do this here also.
No, our consultant is telling, sir, if you account in the same month only, you can avail the same month.
No.
Not like that, no, sir.
Mr. Akela, just one moment. I will also unmute Mr. Kashinath. I think he has something to mention as well.
But I have addressed Kashinath's chat also. See, here what Malyadri is not saying that whatever the 2B is there, that you take the credit. What he is saying that there are practical scenarios wherein 2B it may be appearing because the other end, the supplier has paid the taxes and then he made the supply and he received the payment and all that. But there are some practical issues at the receiving end wherein that he did not do the GRN, he did not account for the goods in that month. So his question is whether he can defer it. Certainly he can defer it because that in the 2B, what he is suggesting that a temporary ledger is created wherein all the 2B entries are pushed into it only on receipt of the goods and after doing the GRN to your satisfaction, then when you are accounting the goods only that you want to push it into the financials. So this temporary ledger, what he is maintaining is not impacting his financials or it is not impacting the GST reconciliations also. So it is something which is going to facilitate his monitoring. So that is what he is suggesting. There's nothing wrong in maintaining such kind of a temporary ledgers. It is not against any rules. And it is for your benefit that you can do it. So that is what he is suggesting, nothing else. There is no implications of how to take a ITC because he is not availing any ITC thereon. He is temporarily posting those things and he takes ITC only on receipt of the goods and on receipt of the invoice and on completion of his GRN processes when he wants to actually account only at that point of a time that he is availing the ITC and he is pushing it to the financials. So I think that there's nothing wrong in the way that Malyadri is suggesting. So what if Kashi is having any kind of objections or any other views that we can discuss?
No, sir. Here nothing else. The kind of series of questions what Malyadri is asked. I was just observing it. When he is thinking about one invoice which is going to account in the month of November and he is to be appearing in October and he wanted to claim in the month of October only. So where I understand that whatever is appeared in 2B, he wanted to claim it on the respective month only. Then later part
he wanted to defer it.
No. But understanding that series of questions from Malyadri, I understand that it's not only parking there. He wanted to claim that in putting in the temporary, the kind of partial kind of parking there, and later part he wanted to post it as and when he issued the invoices. So that is actually wrong.
Why?
No, but when you do not have a invoices presently and it is
See,
appearing in
he is
2B
not,
also,
he is
you
not pushing it to the financials. He is not claiming the credit. He is not going to use it in the 3B. He has temporarily posted it in the temporary ledger he is maintaining, wherein all 2B entries are posted there. He takes it into the financials and subsequently to 3B for either utilization or for claiming refund. Only and only when he receives the goods, he is having the invoice in his hand and he is done his GRN and accounted for the goods.
If this is the true case in Mailadri case, then well and good. So,
that
but
is what
my
he is
understanding with the
explaining, right?
second question, my understanding with the second question of Mailadri,
Ah.
where he is not leaving that one invoice, he is wanted to account in avail in the month of respective month only when it is appearing to be without having the invoice copy when he is accounting the invoice in the next month also.
I
So
don't
my
think,
understanding that
no, it's not that. Understand. Malyadri can correct.
better let Mailadri can correct here.
Yeah, that's what I'm telling. Let Malyadri correct. Malyadri?
Just a minute, sir. Just a minute. Yeah, he can unmute now.
Even Sarala madam is also raising the same question.
Tell me, sir.
See, what he is saying, that without receipt of the invoice or the goods that you want, because it is appearing in 2B, you wanted to take a credit. That is not the case, right?
Yes, sir.
Yeah.
Just we will parking the invoice.
Exactly. You are parking it in the temporary register.
Yes,
only on receipt of the goods and the invoice, and when you complete your GRN process at your end, that you want to take it into the financials.
Sir, it will be reconcile also. 2-year reconciliation happen.
No. That and all is fine. But the problem what Kashinath sir is having, that even without receipt of the goods or the invoice, if you are taking the credit, that is wrong practice.
No, sir, we will
not
post.
objecting.
That will not
That
post.
is not what is the case that we are discussing here.
Yes, that will be in the parking stage only.
Right.
When you receive the physically goods and invoice, then only will post.
Right.
Which is not posted, that is non-reconciled with 2A.
Yeah. That I have understood. Right.
Instead of doing but if you are not availing the ITC Mailadri, you don't need to keep the parking account. One more account.
No, that is for his temporary, sir. That is for his purpose, for his monitoring.
See, it will save mode only.
Okay.
See, 3 columns is there in ERP: save, clear, and post.
Understood.
Will not post. Just keep it in the save mode. And after once received all the goods and all, then we will post it.
Yeah, why I raised my question is that whatever appearing to be that is 100% is not an eligible kind of thing.
So you will not take. Sir, entire thing you will not take. For accounting purpose, instead of doing individual invoice accounting, you can do at a time. Accounting part will be once invoice comes, you will post it one by one.
Sure. Agreed.
It is a verification.
Right, any other questions that we have from any other participants?
It is just my suggestion only, sir. It is useful.
No. That's right. I agree. So, any other questions, sir?
No, sir.
Any other participants? I really thank for at least 20 members are still available.
Absolutely,
now.
Sir. Absolutely.
That is really
correct.
to see the kind of importance that you have given to this session and the discussions that we are having. Though it is a one-to-one kind of a discussion, but since it is of interest for everyone, all the people are still staying here. It's a very good thing. And I really thank all of you for attending this session, taking time out of your busy schedules. I'll be happy that if you can suggest the topics for the next webinar so that it will be more useful for you people rather than we taking up that. I think so far that we have always selected relevant topics and keep you always engaged. It's not that we talked about some irrelevant topics and all, but certainly suggestions from your end are most welcome, that you can share it with WebSolve so that he can pull out one of the important topics out of it. That is one other request from my end. And I thank sincerely the WebSolve team as well as the participants also for making this session such a successful and interactive one. Thank you.
Thank you so much for the kind words, sir. Of course, it couldn't have gone this far if not for you, obviously, sir, your presentation and your presence. So thank you so much for that. And thanks to the audience as well for being an absolute great audience with the engagement levels. Of course, as he mentioned, we still have 21 people and it's almost 1.5 hours since we started the webinar. So thank you so much for your time, audience. If there's any further queries, I will obviously share the post-webinar mailer in which you can definitely respond back, and I will route you to Mr. Akela. You can also find his contact details, and we'll also share the webinar recording and the presentation in PDF as well. And those of you who've shown interest for the demo of our solution, my team will reach out to you by Monday or Tuesday on call, and we can surely understand your pain point and arrange a free demo of our solution. So on that note, I think we can close it for the day. Thank you all, and have a great evening and a wonderful weekend. Thank you, Mr. Akela, and thank you, audience.
Thank you, one and all.
Bye, everyone.